Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC TV 18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC TV 18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Surabhi and Mangalam is joining us today. Guys, hi, good morning.
Good morning.
Hi, good morning. And Prashant, welcome back. We missed you last week, but we ensured that there's no wider fall, as you would have noticed. Nifty was more or less range bound, but global cues are as exciting and as diverse as ever.
Well, but as exciting and diverse as global cues are, the Indian markets seem to have decoupled a little bit from the global cues itself all of last week. Barring the first trading session where we saw a big decline and thereafter there's a recovery, seems like the Indian markets are now moving on their own tunes.
Looks like it, and hopefully that will be the case. And IndusInd Bank last week.
Yep.
Oh
Big
boy.
headlines, yeah. Never a dull moment, Prashant.
Well, there's always something, and that was, of course, very, very eventful in that sense. Let's just take it from the beginning and just put into context where we are and where perhaps we might be heading, right? So I'll start with the context. U.S. markets have had a tough week. The last week was pretty tough. They've been... Equity indices have been down, I think, now for 4 straight weeks in the US. India, though, held out. That is essentially the contrast that I want to highlight. US down, India not really selling off. And remember, there was that 700 points that India sort of gained from the lows, which could have been given back as the US sold off, but it did not. Those 700 points mainly came the week before last. And then, last week, we kind of managed with a small cut, 0.7% lower. S&P down 2.3%, the Nasdaq was down about 2.4% or so. Now, this is, of course, weekly outperformance of India and, of course, the weekly change in the US. But I must mention that on Friday, Wall Street did bounce back. And S&P was up 2%, largely on the back of short covering and maybe no news. No new news on tariffs, no new news on Ukraine, Russia, and generally, it was a light session. Volumes, etc., were light with that 2% bounce that we saw on Friday. The big question for global markets, of course, is that is the U.S. market correction over? Remember, at one point, at the lows of last week, from the highs that we saw in February, the S&P had lost about 10%. Typically, 10% drawdowns in the S&P have been good buying opportunities. Will it be the case this time around as well? There is a little more uncertainty right now. That's the change as of Friday's close because we did bounce 2% on Friday. S&P from the highs is down 8%. The 10-year is down about 50-plus basis points, and the dollar index from its highs is down about 5%, a little over 5% or so, which means that the U.S., at least the markets in the U.S., are in some ways, adequately or not is a different question, but they're pricing in weaker U.S. growth, and that's largely on the back of uncertain trade policy. You got to look at sell-side estimates. Everybody's brought down GDP growth estimates for the U.S. because of this. Now, of course, the key to this we'll only know in about 15 days' time on the 2nd of April when those reciprocal tariff bit will come through. And that's the big one in terms of how Trump will sort of play things into the 2nd of April. You can make the case very forcefully that, he's going to go through. Or you can also kind of look at the other side and say, well, he'll be pragmatic. Markets have corrected. They're down about 8% from the highs, and he doesn't want more damage. So, that's essentially the picture. Next 10, 15 days, I think things will become much clearer. And that's the big one. Reciprocal tariffs around the world, many countries affected here in India as well. We have the Fed meeting on Friday, on Wednesday, beg your pardon. And there is, of course, they will decide with the backdrop being anxiety around U.S. stagflation. And just to sort of, make that point about the concerns around U.S. stagflation, take the data point from Friday, which is the University of Michigan data point. Sentiment fell, inflation expectations jumped. 1 year, 5 year, 10 year, inflation expectations jumped. So that's that. Now, most likely, like the last Fed meeting, because there is so much uncertainty, Fed is likely to say, well, they're in a wait-and-watch mode, wait-and-see mode, nothing very much beyond that. Here in India, we get a bounce this morning because, of course, the 2% move on the S&P. And of course, the fact is, you just think back last Monday when Nasdaq fell 4%, and here in India, we actually ended slightly higher. That's a very, very healthy sign, and that kind of persisted through the course of the last 5 trading sessions. Having said that, I mean, I would say the backdrop is not sell the rallies. It perhaps is if you get big dips, they get bought into. But we've still not been able to cross, after everything last week, we've not been able to cross the 20-day moving average, which remains a resistance. Support comes in at 22,315 and 22,236. Again, very near term, 50-60 points away from where we left off on Thursday. And of course, on the upside, break above 22,676 is needed. We left off at 22,400. This morning, I think GIFT Nifty is indicating about a 100-point higher start. For the Nifty Bank, we ended absolutely flat on Thursday. That's the last trading session. Multiple resistances between 48,500 and 48,840. And here supports come in at about 47,700. I would say the texture perhaps on continuously sell the rallies perhaps has changed a little bit at the margin, although we need to track how things proceed from here. And of course, the big clarity will only come in about 15 days' time. And of course, comments and sort of statements, etc., into the 2nd of April when he's supposed to decide on what to do with tariffs on a broad basis. 140 higher on the GIFT Nifty. Surabhi.
Absolutely, Prashant. When we went into the long weekend, we were awaiting two more data points from the US. We'd seen the consumer inflation print, and that was soft. Producer prices and the University of Michigan sentiment is what, of course, the market wanted to see. So very quickly, like Prashant mentioned, just reiterating the number there as well. The index came in at 57.9. This is for March. The expectation was 63.2. So that, indicated that obviously the consumer sentiment fell more sharply than anticipated. The one-year forward inflation projections are at the highest in September 2022 at 4.9%. However, the PPI data, the producer price inflation number, that was again soft. You can argue maybe that the future numbers will capture the full extent of the inflation expectations, but PPI numbers were below estimates. 0.3% increase was expected. It was absolutely flat. Gold, by the way, managed to move above 3,000. This is COMEX gold I'm talking about, 1 year forward, 1 month forward contract above 3,000. This morning, that contract is just a shade, minor, notch below that. But it gave an indication of, the uncertainty with respect to the course ahead for the US economy itself, which is why gold was rising. The other important point to keep in mind for Friday specifically was the rise in the German market. And the Germans have managed to come together to approve this big fiscal bazooka, which is 1% additional GDP spend on defense and a 500 billion euro package for infrastructure. So that's something that Friedrich Merz has managed to cobble together. He's managed to get the bipartisan support on that. Coming to China, there are lots of data points that are coming out of China over the weekend and this morning as well. Now, China has announced a special action plan to boost consumption. That's number one. What are they saying? They're saying that the incomes should be higher. Not too many specifics right now, but that generally they're saying that in order to boost consumer level demand, incomes should be higher. They'll take more steps to stabilize the property market. They're talking about boosting travel and tourism in the country as well. And over the weekend, very interesting reports on fund managers. Probably not a great idea to be a fund manager in China because if you're going to underperform the benchmark, your salary could be halved by 50%. That's what the Chinese market regulator is stipulating or proposing right now. There's more data out of China actually as we speak, and that's all looking very good. Fixed asset investment growth is above estimates. Retail sales at 4% are slightly higher. This is club data, January and February combined because of the Lunar New Year break. And most of those numbers are actually looking pretty all right. Asian markets have been largely holding up. In fact, if I quickly parse through what some of the market indicators are saying, it's a broad sway of green. The Hong Kong market's up about 1%. It did very well on Friday as well. And the mainland Chinese market is also higher. Even the Japanese market is up 1% higher. So big positive cues coming in from Asia this morning. The Nifty kept seeing consolidation. So the problem really was not with the Nifty last week. It was with the broader market. So I'll again watch out for what the small cap and the mid cap indices do because they were the ones that were still feeling the pain all through last week if you look at indicators. The best cue for us has been the fact that FPI selling has been coming down every single day, barring the day we had the IndusInd Bank episode. The FPI net sell number was lower and that continued. Look at that. For the first time in our, I don't know how many sessions, we are in triple digit territory, not looking at even 1,000 crore sell, less than that, 800 crores of selling coming through. So that's good news. On IndusInd Bank, just keep the spotlight open because the RBI made some statements after market hours on Thursday, largely to assuage any concerns about the health of the bank. They basically repeated the latest ratios. So capital adequacy ratio of 16.4%. The PCR, provision coverage ratio, is 70%. RBI saying the LCR for IndusInd Bank is well ahead of regulatory requirements at 113%, and saying that depositors should not react to short-term speculation. The bank's financial health remains stable and is being closely monitored by the RBI. Also, the RBI indicated the bank has been directed to take remedial action and ensure all disclosures are made to shareholders and to stakeholders within the fourth quarter itself. So this is something that will keep IndusInd Bank in focus. But Mangalam, like you've been also saying, I mean, largely good that we managed to consolidate. FPI selling intensity has been reducing, and the Asian cues are very supportive this morning.
Yeah, 2 points you all made. One, Prashant saying that maybe the texture of the market has changed from sell on rally to about buy on dips. And for you as well, the FPI selling reducing is something that I'm watching out for. And all of that is encapsulated in some very interesting data. So if you look at all of last week, the Nifty lows have been maintained. And if you look at the Nifty lows as well, and this despite the weakness that we've gotten from Wall Street, etc. March 11, the low was 22,314. March 12, the low was 22,330. And March 13, the low was 22,377. So we have been making higher lows. That is a big positive. The second part is that at higher levels, we are facing supply about 22,500. So to that extent, the GIFT Nifty uptick and that sustaining would be extremely crucial, because if you look at the highs over the last few trading sessions as well, they've been contained around that 22,550 to 22,600 sort of mark itself. And that's exactly where we opened today. So sustaining the opening highs will be very crucial to track. The FII is selling sub 800 crores yesterday. All of March itself, the average has been around 2,300 crores, which in any case is lower than we saw in the previous couple of months. So that is a positive. And there hasn't been any incremental selling by FIs in index futures. In fact, if anything, there has been incremental buying. So they've bought Nifty Bank and they've sold Nifty futures, perhaps because of weakness that we're seeing in the IT pack itself. So Nifty Bank will be the crucial one to track. FIIs 19% long, 81% short. What are the index option writers hoping for in terms of a range? We have some action at the 22,500 call and the 22,600 call, telling you that there is congestion expected around 22,600 to 22,650. And at the lower level, however, like I pointed out, there have been lows which have been contained around that 22,300 mark itself. So 22,400 put writers and the 22,300 put writers are both extremely active. Short point for the option writers, what they're looking at is support around 22,250 and congestion above 22,600 itself. Just a couple of other data points that I'm looking at from a technical standpoint. Now the Nifty 20-day moving average has come down from 22,750 earlier last week to around 22,587. So that's something we'll watch out for. And can the Nifty Bank make an excursion towards that 20-day moving average or not? It's something that we'll most definitely keep an eye out on too.
All right, Mangalam, thank you very much for that.